Hello, friends. So, as I mentioned on my Facebook page, I would like to share with you my experience of trading as a day trader, or a lot of time I swing trade when you hold the stock overnight, sometimes longer, 2-3 days, sometimes 2-3 weeks, or even longer. I decided to try to trade stocks about a year ago. It's been a while since I started being interested in trading stocks. I believe that I always wanted to try. And it just happened that last year, around the end of November, I funded my Robinhood account. And it was the worst timing ever. As some of you know, last year, December, actually, Christmas Eve or Christmas Day, December 24th, the stock market did the mini crash, and I saw my account going down, I would say, close to 10%. Since then, I had up and downs, good days, bad days, but overall, I'm down on what I invested. I wouldn't want to say exact percentage because every day it changes. But what's more interesting, I did not lose interest in trading, and I did not lose the confidence that I can do it successfully. Let me mention why I decided to use Robinhood platform. First of all, last year it was the only trading platform or broker, internet broker, that offered free trades, meaning that they would not charge you when you buy or sell your stocks. Anyone else at that particular time was charging anywhere between 4 to 6 or even more dollars. You probably heard about E-Trade, Charles Schwab, TD Ameritrade. What's interesting, as of this month, or maybe even a little bit earlier, many of those trading platform and houses became fee-free as well. So you don't need to trade on Robinhood anymore. You can open your account with $0 or add $5 to TD Ameritrade. Learn how to use their platform and start trading. I know that Charles Schwab offers it as well. I'm not sure about E-Trade. So anyway, there are options. The next question that you would like to ask is what to trade, how to make money, how much money do I need to put on my account to make a substantial, interesting income, not just a few dollars, how much time it would require every day from me to trade or every week. Let me go step by step. First of all, there is a rule that didn't change for anyone. If you don't have $25,000 balance on your account, whether it's in stocks at their current prices or in cash, you're limited to only 3 trades per week. So you can buy and sell one stock 3 times within 5-day period. That's not too convenient, I understand. And unfortunately, it's probably realistic to say that not everyone can start with $25,000. But even if you can put $1,000, you will have three chances to increase that amount. Now, how much realistically can you make? Well, it all depends what you trade, how much risk you're willing to take, how lucky you are, how much you know stock market. There are many, many things that are involved. And I would strongly advise that do not go over your head thinking that you're going to beat the market and start making money on the day one. The main goal is not to lose. That's what I'm trying to implement now as my strategy. It's not how much you make, it's how much you don't lose. Put it in another words, would be you can make a great buy, and then you can sell the stock and make, let's say, 3-4% on $10,000. That's $300-$400, and then you would try to take another opportunity, and unfortunately within few minutes, 5-10 minutes, you can lose all those gains and be so much down that it'd be hard for you to sell that stock, even though it would be going down and you'll be seeing your account just going down with it. So that's the main thing about trading. You have to be very disciplined and being able to sell as soon as your losses reach particular level. There is a general rule of 1%. If you see that this price of the stock that you purchased is approaching 1%, it's probably not a bad idea to sell it all, because most likely if it went 1% down, it will continue going down. Yes, there is a chance that it will rebound, and then you would feel like you lost an opportunity and actually did lose some money. But by experience, I can tell you, if the stock is already 1% down and you watch that stock, let's say, for a while, you know how it behaves. You know, it's not just a pullback when the stock, after climbing up for a period of time, goes down a little bit just to continue upward trend a few minutes later. That said, there is a lot of little things to learn, and I would suggest that you spend time studying YouTube videos. There is tons of material on YouTube, and I will share with you information channels that and trading channels on YouTube that I try to watch almost every day. At least I watch them 2, 3, 4 times a week, and by doing that, I've learned a lot. Did I learn everything? No, and I doubt that anyone can. Stock market is still very risky business. You never can fool market. You should not forget that the market is being moved by multiple factors. Lately, as we all know, the single tweet from our president can send market up or down few percent, and there your gain goes. Or you get lucky and you can capitalize on that good news, and if you're not too greedy, sell, take the profit. Again, depends on the strategy. Some people like to hold the stock, especially if it's a major company, and if you lucky enough to buy it when on a deep meaning that the stock was going down for a prolonged amount of time, and then it found the bottom price. It stays there for a while, and then most likely from there it will start its recovery. So if you bought there, you might as well hold that stock for a while. You do need to learn some charts, because those charts will indicate, charts show what stock, the history, what stock price did in the past hour, a day, 5 days, a month, 6 months, a year, 3 year. There are charts basically of any period, and looking at those charts will help you to understand and sometimes predict the next move of the stock. Now, if there is a question, what stocks should I trade? That's a very good question. There is many different, probably tens of thousands different stocks listed. I prefer to trade major S&P 500 stocks, those stocks you hear every day on the radio. Netflix, Boeing, Tesla, Bank of America, AMD, many other, Google, of course, Amazon. Some of them are pricey. For example, just to buy today, one share of Amazon would cost you anywhere between $1,760 to $1,770. To buy, let's say, one share of AMD, on the other hand, would cost you $33. But again, it's not about the price. Of course, to trade Amazon and to trade it, let's say, not just one stock, even just 5 stock, you will need almost $10,000. If you have $10,000, you can buy 300 shares of AMD. But at the end of the day, both of those stocks will move up or down few percent, maybe 1, maybe 2, maybe less. So effectively, your gain or loss will be approximately the same, and that's why it's not a bad idea to diversify and choose stocks from different categories. There is so-called FANG stocks. Facebook, Amazon, Netflix, Google. That's why it's called FANG. Those are big tech companies. There is stocks that are major banks. There is stocks that relate to some particular industry, pharmaceutical, or let's say Boeing aviation. So it's not a bad idea to diversify it, because a lot of time, here's a good example, a lot of time when overall stock market is rising, McDonald's prices for some reason are going down, and it works in the opposite direction. When the overall market, major stocks are declining, oftentimes I see that McDonald's stock prices are rising. So that said, you will have to decide on what you're interested more, and depending on your budget or your balance, you will choose what stocks to buy. Now, I strongly recommend, especially at the beginning, not to trade penny stocks. Penny stocks are stocks that are low priced. I believe that penny stock is the stock that is not more expensive than $1-2 per share. There are some good companies that you can trade, and their prices anywhere between $2 to $10. But again, I'm not, in this video, I don't want to go into details about all the stocks that I'm interested in. What I wanted to say is important. Try to avoid so-called pump and dumps. Pump and dump stock is a stock of the company that yesterday no one knew. Overnight, there is a catalyst comes around, usually some sort of news, and it's very hard to know whether it's a legitimate news or just prepaid self-advertisement, so to say. What happens next morning? This stock goes up with such an intensity, so fast and powerful, that a lot of traders they find those stocks on scanners and they trade those stocks. That pumps those prices even higher. Only for those big traders to utilize that uptrend and at some point sell their position. What happens to the stock? It drops even faster than it went up. What happens to those unlucky investors like you and I, who thought that you found a gold mine and gonna get rich within 1 hour? You will lose, and you will lose substantially. Most likely you will never recover your initial investment in those stocks, and you'll be forced to sell it at a huge discount and loss. So I strongly recommend not to trade pump and dumps, at least not when you're a novice, when you're just starting. So I'm sorry that video becomes a little bit long, but I would like to finish it with the idea that in my future videos I would start sharing with you my trading ideas, my experience. I'll show you my trades. I'll show you charts, how to read them. Of course, you can find that information from professionals on YouTube. But at the beginning, when I started to do so, I found myself that there was a lot of things that I didn't understand. So I would try to create those videos very, very much beginner oriented, without going into too technical details, but at the same time giving enough information to start wetting your feet, so to say. All right. Thank you, my friends. So hopefully I can secure that name, Trade Contractor. As you all know, I spent 25 years in construction. Now I'm trading. So hopefully it's a good match and good combination. That's all. Good night. Till if you like it, please subscribe and like. I'll figure out how to put those links. Otherwise, that's it. Bye.